afternoon. Welcome to Markets Today. I'm Lata Venkatesh. With me is Surabhi Upadhyay, and we have put behind a fairly successful week for the stock markets, with the Nifty finishing over 8,800 and the Sensex finishing over 29,000. It didn't look anything like this on Monday, so a very successful week. Hi, Surabhi.
Hi, Lata. The correction suddenly seems to be distant to memory, I suppose. All right, let's run through the top stories. A fantastic Friday for markets as bulls push the Nifty above 8,800 with a gain of over 1%. Banks and healthcare stocks see brisk buying. Mid-caps gain, but a shade below blue chips with the mid-cap index up 0.8%.
The big boy state banks surged 8% today after posting a stellar set of earnings. Actually, asset quality was the one that remained stable. Fresh slippages and restructuring remained contained. The State Bank Chairman Arundhati Bhattacharya said it will take another 1 to 2 quarters before ascertaining if the worst of the NPA cycle is over.
It's been a modest beat from Mahindra & Mahindra as well. Profit shows a near 6% rise versus expectations of a fall. Consolidated top line declines 9.7%, but the fall is again less than anticipated.
And a mixed bag of earnings for oil marketing companies. BPCL moved into black thanks to a 1,000 crore rupee subsidy payout in Q3. However, a massive inventory loss of 15,000 crore pulled down Indian Oil further into the red as the company reported a near 3,300 crore rupee loss. Well, those are some of the headlines from the market, and here are the experts that we have lined up on the show for you today. Market perspective from Rajat Rajkaria, the head of research at Motilal Oswal Securities. We will also get you the managements of some of the companies which declared their quarterly earnings and made a big splash. Arundhati Bhattacharya, for instance.
So lots of opinion coming your way, but first the day's trading action. Well, fantastic Friday, and what a fabulous week it's been. It's perhaps safe to say that bulls are now in control of the market on the Lal Street. Anuj Singhal is now joining in with all the details. Anuj, so bulls in pole position?
Well, clearly the bulls are in total control, and the slog overs are also clearly something that bulls are using to their advantage. And I am, of course, in India jersey. Today is Friday, and of course on the weekend the World Cup starts. So I thought maybe can take this advantage and wear the India jersey. But let's talk about some of the stocks that led the market higher today. State Bank of India really was the key catalyst in today's trade. That stock was higher by 6%. Post stellar set of earnings, in fact 8% by the time it closed. Mahindra & Mahindra again on back of numbers was up 5%, and Lupin, where the FIIs can buy again, that stock was higher by about 4%. In terms of some other heavyweights, we had stocks like TCS, HDFC, ITC. All these stocks were higher in trade today and helped the market. One sector which has been having quite a bit of good time is cement. All through this year, we've seen big gains in all the three major ones, and today also Ultratech, ACC and Ambuja were up about 2%, up 16% for this year, all these three stocks. On the losing side, we had few stocks like GAIL, BHEL and DLF. BHEL was earnings impact, of course, that stock was down 3%. Let's talk about some mid-caps today. It was slightly muted compared to the large caps today, but still there were some big gainers like Gillette, that was locked on 20% circuit. MRPL was up 9%, and Marksans Pharma was up 9.5%. On the losing side, of course, you had stocks like GVK, HCC and Pipavav. Pipavav in particular down about 3.5%. So that's the market for the day and the week. The bulls are clearly back, but really the focus now is on Sunday, the India versus Pakistan match. And I tell you what, my head says Pakistan, but I'm always wearing my heart on my sleeve, and my heart is always with India.
Well spoken, Anuj Singhal. Friday the 13th turned out to be lucky for the markets, and let's hope Sunday will turn out lucky for India and for the boys in blue. But just to add, the Virat Kohli of the day quite clearly was SBI. And I just want to add something in terms of what it does to the entire outlook on the PSU bank space. I mean, the PSU bank index, for instance, today wrote 5.25%. And barring SBI, most of the other banks, most, not all, had reported rather beleaguered earnings, which wanted to make you think that the growth cycle is in such a dilapidated stage that perhaps some external cure is needed for the banking assets, the bad assets. So, it was very difficult to call a buy on any of the banking stocks. But the way in which SBI has performed gives you the feeling that this is a doable problem. It doesn't require any extraordinary effort from the government in terms of creating a bad bank putting all the assets over there, rewriting, the net worth of some of the public sector banks. It's not as bad as that because SBI is 25% of the banking system. So SBI kind of turns the tide or turns the outlook on the growth picture itself. And with yesterday's CPI number coming in lower than expected at 5.1 and the growth number in the revised CSO index looking good at 7.5, the growth picture actually doesn't look so bleak. SBI has cast such a magic pall on every number on the street. So watch out for that. That gives the perfect setting for the bulls to drive into past the 9,000 mark. And now that is what, about 3% away. And note the mid-cap index. We must pull that up for you. If possible, a 52-week chart of the CNX mid-cap index. That's also just about 183 points from the all-time high of 13,283, 13,100 today. I mean, how many inches is that? It's, less than 2% away from its highs, or even less than that, maybe 1% away from its own highs. So clearly, bulls in the driver's seat, as you put it, Surabhi.
So maybe if we win the match, maybe that'll be one more reason to go all the way above 9,000. Maybe it could be a very cheerful start to next week, but let's wait for that. Let's now get some market perspective going. Rajat Rajkaria of Motilal Oswal Securities does not expect to see an earnings recovery over the next 2 quarters. However, he does expect FY16 earnings growth to be above 15%.
If the earnings growth for FY16 may not see any meaningful downgrade, that number still may be above 15%. The base number itself is changing. So if earlier you were expecting a 15% growth on 100, that number would have been 115. But now if you are expecting a 15% growth on 90, then that number becomes 105. So the absolute EPS for FY16 itself will see a downgrade. This year at least looked like that a 10 to 11% kind of an earnings growth at the aggregate level should have been done. But it looks like that 10 to 11% may get scaled down to now just at about 5% also. I think we are not going to see recovery at least for another 2 quarters in the estimates.
Right, that's some opinion, a little downbeat, a little cautious. Now for all the action from the futures and options space, let's go across to Nigel D'Souza.
Well, looking at the options data, the bulls will be feeling fairly confident, while the bears really, they'll be running for cover. Because take a look at the put action today, the 8,800 put, that was getting written in today's trading session. That's why the Nifty made the dash towards that level. But the 8,700 put as well as the 8,400 put, they are getting written, and traders in the near term, they're looking at around that 8,500 to around 8,600 level, holding out as a firm support in the near term at least. Now look at the call side. Some of those call writers in the downtrend, they were making big money. Now those bears, they're throwing in the towel, because take a look at the 8,800 call as well as the 8,900 call. The premium spiked up by close to around 20% in today's session itself. So those call writers, in fact, they're throwing in the towel. They are unwinding their positions and getting out of the market. Out of the money call buying as well is making you some money. So the 9,000 call, just a few trading sessions ago, it was in single digit. Today, in fact, that premium moved from around 29 bucks to around 40 rupees. So big money being made for those traders that are taking a bit of a punt, going ahead and buying that 9,000 call option. Individual stocks that are in focus. SBI was a big stock today. Big buying we see on that counter. Take a look at the open risk build up as well. While ICICI Bank did come in for a short covering bounce in trade today. OBC as well did see a big short covering bounce, while Bank of India as well, that stock as well, did see a big short covering bounce in today's session. HDIL has had a big run, but otherwise today in a very strong market. That one was getting sold into. Coal India as well did start off on the weakish note. There was some selling that was seen. Those shorts covered up their positions, and then we saw fresh buying on that counter as well. While BHEL ended down by 3%, selling was seen on that counter. And the big gainer yesterday, India Cements, that one did see some unwinding pressure.
All right, Nigel, thanks so much for that. Let's then move on to the big number of the day. State Bank of India surged in trade after third quarter numbers reflected a solid performance. In fact, the bank delivered good numbers on asset quality, with gross NPAs maintained at 4.9% for the fourth consecutive quarter. We have now Ekta Batra joining in with a comprehensive lowdown on these numbers. Ekta, it was such a relief and such a wonderful thing to see SBI come out with these numbers. Just take us through the performance.
Well, it was definitely a solid performance for State Bank of India on mostly all parameters. The asset quality was the key positives that stood out. So, for example, it was the fourth consecutive quarter that the company's gross NPAs were maintained at 4.9%. It was the fourth consecutive quarter that the gross NPA was in a range of around 60 to 61,000 crores. In terms of the internals of the asset quality, also most of them were a positive. Fresh slippages lower sequentially at around 7,043 crores. Slippages from the restructured book were lower at 1,450 versus 1,700 crores sequentially. The fresh restructuring, however, was a bit sticky. It still came in at around 4,000 crores for the quarter. Write-offs were higher. Upgrades and recoveries were lower sequentially at around 667 crores this quarter. Management did say that the sale of loans to asset reconstruction companies was muted this quarter. PCR maintained at 63.56%, similar to last quarter, and the restructuring pipeline, however, guided by the management, was a little higher at 5,000 to 5,500 crores. In terms of other parameters, profit growth of 30% for the second consecutive quarter. Net interest margins maintained at 3.12%. The only worry was that the NII was in single-digit growth, but it was in line with expectations.
All right, Ekta, thanks so much for that. Well, SBI Chairman Arundhati Bhattacharya announced a mega auction plan for the company and also said that it will take another 1 to 2 quarters before ascertaining if the worst of the NPA cycle is over.
We are going to have a mega auction on the 12th of March. I think 300 assets are being put on auction, of which, 14th of March, don't get the date wrong, 14th of March, and 300 pieces of assets, right? Of which amounting to around 1,200 crores will be auctioned, and of which 100 will be residential. So we are doing a lot of these things. It is a question of follow-up account by account. We've been doing everything, every single thing that is there on the book in order to get the NPAs to be resolved as quickly as possible. And as you know, we have a whole setup now which looks only at NPA resolution.
That's what you call a solid leader at the helm, and that's exactly what PNB and BOB lack. They don't even have a chairman. Okay, coming back now to the auto space. Mahindra & Mahindra posted third quarter numbers which actually were better than the street's muted expectations. Varinder Bansal is here with all the details.
Thank you so much. Well, M&M has to thank to all the muted expectations what it was going into the result season, and of course the short covering which helped the stock to move up nearly 5%. The results were a tad bit better than what the market was expecting, but the stock moved up nearly 5%, and that was because of the top line beat which came in there clearly. But if you just look at the numbers, the net profit, consolidated net profit numbers of M&M plus MEML which were reported, they came around 967 crores thanks to that exceptional gain of 299 crores on back of the merger of Mahindra Engineering with Tech Mahindra. The adjusted PAT was nearly 667 crores, which was better than the analyst expectation of nearly 640 crores. Total income was a beat thanks to the volume, thanks to the pricing uptick what they have taken, and not because of the volume. The total income came at 9260 compared to expectation of nearly 9043 crores, so nearly 200 crore beat seen over there. The EBITDA margins came completely in line, or even if you look at the absolute EBITDA which came totally in line with expectation. The automotive segment revenue was down nearly 5.8%. Farm equipment revenue was down nearly 15.3%. While the management clearly said that the tractor division will take at least 1 or 2 more quarters to see some revival, but it's a CV cycle where they are seeing some revival happening in. Remember, this is one stock which has been the underperformer among the entire auto pack, and today's short covering helped the stock moved up. Clearly, most of the analysts on the street will be watching out for that launch of 3 new UV platforms in CY15, which will be very critical for the stock. But for the day, it was slightly better, but thanks to the short covering and the muted expectation, the stock was up.
All right, Varinder, thanks so much. Another big boy that had a good solid close thanks to those earnings. Moving on with more numbers, state-run oil retailer BPCL has turned profitable in the third quarter. This on the back of compensation for losses on fuel sales. Profit came in at 551 crore rupees versus a loss of around 1,090 crores last year. The company got 1,080 crore rupees of cash subsidy from the government, and upstream oil companies also extended assistance. Gross refining margins for the company stood at $1.54 per barrel versus $1.76 last year. Net sales, however, declined around 10% to come in at 57,873 crore rupees. Inventory losses stood at 1,600 crore rupees on the back of a slump in global oil prices. Let's hear out now what the management had to say.
And on average, BPCL is having almost around 500 crores per subsidy per annum, per month, both on LPG and SKO put together, kerosene and LPG put together. Margins are as more or less at the mark-to-market levels today. So I don't think there will be any dent in the margins as of now. The same 1,800 rupees per KL may continue.
All right. Indian Oil Corporation, though, was not so lucky. The net loss in the third quarter widened to 3,285 crore rupees from 961 crores last year. That was on the back of huge inventory loss and lower other income. Net sales also declined from 1.17 lakh crore rupees to 1.07 lakh crore rupees. For April-December period, gross refining margins have fallen from $4.97 per barrel in the year-ago period to minus $2.66 per barrel, again on the back of that big inventory loss, which stood at 15,017 crore rupees.
All right, time for a break now, but coming up, more on the earnings front, and we'll also get you some trading ideas for next week.
I'm asking all three of you to be betting men, even if you aren't, and bet on the one change that you expect will happen on this budget.
Surcharges, DDT, MAT, all three will happen.
Now, I would agree that MAT on both SEZ and FII is something which will be definitely relooked at, and hopefully that issue will get resolved.
I think the increase in exemption limit from 2.5 to 3 lakhs as one, and the second I think is investment allowance. I think they will come up with an investment allowance maybe from 15 to 20, and maybe for a much larger window, not 2 years but say 5 years.